Guys, welcome back. I just thought I'd give you guys a little bit of an update on a trade that I actually entered via a sell limit yesterday and that I've just re-entered again, and that's GBPCHF. This is what I have marked at the moment, obviously on the 1 hour time frame, but I will do a top-down analysis and I guess sort of, tell you everything, my process and how I went about it from the weekly. Just a bit of an update. GBP AUD absolutely smashed take profit that I had set, which was at about 350-ish pips. Insane risk to reward ratio on this one, so obviously that come through extremely well. But to GBPCHF, and I'll run you through sort of my thought process on what I've seen with this trade. So I always start on the weekly time frame. Every single trade that I take, I like to start on the weekly time frame. Now, the first thing that I seen while looking at this pair is the W formation that we can see here in front of us. Now, most Forex traders will know that after a W formation is completed, we do expect to see some kind of retracement, and that's the first thing that I see. And we also see that this 131 limit, that price is quite a strong area, and it has been, for quite a long time. So we see, so we see one touch here, one touch here. We see some consolidation around here, a touch here, a touch here, a touch here, a touch here, and so on. So it was obviously an area of interest for me that I was looking for, but obviously I didn't want to sell first thing on Monday morning because this last weekly candle was extremely bullish. We can see here that last week the pair rose about 300 pips. So obviously you don't want to be sort of trading into that. I do like to see some kind of confirmations and reversals on the lower time frames, which I will get into. You head down to the daily and you'll see as well that even on Friday, the candle was extremely bullish. So I didn't want to just jump in. On the Monday, I did want to see some form of bearish candle to sort of tell me that, okay, price has at least respected that 131 zone. Still didn't want to enter straight away. I did want to see some kind of patterns and stuff like that forming on the lower time frames before I entered. And yesterday I did see the setup that I was looking for. So looking on the daily, as I said, I just wanted to see that first red candle. This one's a little bit more of a basic trade that I was sort of looking for. There's not as many Fibonacci's or anything like that from the higher time frames, but that's what I was looking at so far on the daily. Now, what I really wanted to see on the 4 hour was some kind of, pattern forming. Now, on the 4 hour, the first pattern that you can see is a double top, okay, form perfectly. And we can see a trend line here that I drew. One touch, two touch, and then the third touch, it did reject this trend line here before breaking. So that was sort of the type of pattern that I wanted to see. And obviously we got it. Now the last thing as well, I'm not really a technical based trader. I'm not really an indicator based trader, but I do like to use them for some kind of confluences and potentially using them as dynamic support and resistance. And we can see here that essentially since the start of January, this pair has been extremely bullish. Okay, we have the distance between the two is extremely far, which generally means that the bulls have control of the market. And we can see around this area here that they really started to squeeze together, which is suggesting to me that price is going to head in either direction, and when it does, it's going to move quite quickly. It happens quite a lot if you look generally before price makes a big move. Use here for example, it really squeezes together. The price really can squeeze. It's in quite a range, and then it will drop down, and you can see here that it's really big. Sometimes it doesn't always work like that, but even here as well, you can see a really bullish sort of trend all the way up, a little bit of a correction, the squeeze happens, and then it drops. So it's something that I like to use just as a bit of a confluence. But the main thing for me was the breakout of this trend. So I'll remove all these indicators. And obviously once we broke and closed below, and I seen this little pullback candle here, and even this one, as I said, 2 4-hour candles to me is a pullback. So I'm like, okay, cool, I'm going to draw my fib and see if we can find an entry in here. So you draw your fib high to low in this case. And once again, you can sort of see that the 50 to 61.8, that's the area that I like to look towards, but I also like to look towards what area has a lot of market structure in the past. And you can see here that all through this range of consolidation, it was pretty much in that general area, okay? The last thing, I guess, was, finding, some kind of market structure. Just remember that none of this was here yet. So for me, in terms of market structure, all I could see was this orange line here. You head to the 1 hour. Remember, none of this was here, and you can sort of see a lot of closes around this area. We have a little bit of support here, some resistance here, support here, resistance, a little bit of resistance, and it sort of stayed below. So that was my original entry. I was in a little bit of drawdown, and then a little bit of profit, and then towards this afternoon I started looking and saying, all right, price is making a retracement, what could it potentially be retracing to? So all I simply did was I'll keep that exactly how it is, and I'll draw my fib from the high to the low again, and I can see here that that orange line is almost exactly the 61.8 Fibonacci level. Now to me that was another confluence to say, cool, Asia's generally a pretty slow session anyway, which is sort of, around this area. And then we can see that the last two, 1 hour candles have been pretty bullish. I'm still in a sell with this. I do still want to see it go lower. If not, it doesn't really bother me. There's nothing I can do about it. I try to use the higher time frames for targets. I feel your risk to reward is a lot better. For anybody that uses fibs, you generally know that a negative 27 is a target area, somewhere around here. And if you take away that zone and put your entry right on there, you have a potential, 100-ish pip move. And if you put your stops above the highs, you could be looking at a, say, 30 pip stop. You could be looking at a really good risk to reward, almost 1 to 4, 1 to 3, 1 to 4, which is going to grow your balance quite well. All my trades, I generally like to look for a 1 to 3 risk to reward minimum. That allows you to have a bit of leeway in terms of you can still lose 2 trades, win 1 and still be break even or even profitable on the week. So I just thought I'd give you guys an update. I hope you found some kind of value. If you have any feedback, please feel free to leave a comment, subscribe and like the video, and I'll be more than happy to speak to you guys soon. Thanks guys.